All right, one stock not green today, that's for sure. Foot Locker, our chart of the day, down 6%. Earnings missed. Full year guidance was cut. Heavy promotions leading to weakness there. CEO talking about softness out of Nike. So Nike's problems becoming others as well. Joe, you used to own Nike. You don't. You never owned Foot Locker?
No.
I thought you did. No?
No.
Well, what do I make of this story, and then how I think about other stocks within this space? Because it's all tied together. It's all tied together. Nike's weakness, which has been prolonged, is hurting Foot Locker. Nike's weakness is giving opportunity for market share take by On, by Hoka, and by others. Deckers. Deckers today is a new high. It's a record high for that stock. It's up 83% year to date. Talk to me.
Well, I mean, and that's exactly the way that we're playing it in the strategy, is through the ownership of Deckers, and that's what this is about. Does Deckers have to promote to the magnitude that Foot Locker has to promote? The answer to that obviously is no, that it's not. There needs to be a change, a complete change in the strategy for Foot Locker, and I think this company is primed for some form of activism. I think someone steps in here and really tries to turn this company around and get it positioned in the right way. And I'm not necessarily sure how you do that, because there's such a present in the old brick and mortar framework. And how do you break that down and pivot accordingly? So I think there's secular challenges here, not just cyclical challenges. And I think you're correct. I think it's also hamstringing Nike.
But I mean, can you, Bryn, have a better Foot Locker without a better Nike? Or are they just too attached?
Well, don't you remember, I guess it was 2 years ago, Foot Locker was down because Nike was going direct to consumer and just usurping Foot Locker. And so I just think that the retail space, especially this space, is investors. The consumers likes change. Like right now, everyone wants to buy On, and that'll probably last for a few years. And so I think this whole space, especially within shoes, is incredibly cyclical. And so I think you have to time these trades right. I don't think there are secular tailwinds. I agree with Joe, there's secular headwinds. And so I just think this is, for me, in the too hard bucket. I mean, look at Lululemon. It's like everyone loves Lululemon, and then women, we change what we want to buy, and we go to Alo or Athleta, et cetera. And so I just think this space, investors should, like the airlines, more trade the space than invest in the space.
I mean, the problem is, Bryn, is like lack of innovation, which is what people, tag Nike with, isn't necessarily cyclical at all. It can be a secular issue, which lasts for many, many quarters before you get it right. You can't all of a sudden start, innovating and produce shoes that people want to buy at the snap of the fingers.
I don't think it's innovation, because I think it's about, I don't think that's the right way I'm thinking about it, because innovation to me is like technology. I think Nike is very innovative with their shoes.
But but they've said it themselves. I mean, that's part of the story, undeniably so.
It's a stale lineup, right? And so it's like the Air Jordans were really popular, but they were mostly sold third party. And it's just like the investor, the consumer's taste change. And Nike has not been able to capture what we want to buy, because clearly if you listen to On's earnings call, they're gaining market share. Listen to Deckers via Hoka, they're gaining market share. And so there's only so many consumers that are going to buy shoes, and they're buying Hokas and Ons, and they're not going to Foot Locker, not going to Nike. And it just continues to be in the too hard camp. And also with Nike, you have to deal with China. And so why do you want to go into Nike next year also with the China hangover as well?
Well, it just shows you the lift the new CEO has. Shan?
Yeah, I think that, Joe brought this up, that brick and mortar retail, if you look at brick and mortar retailers that have been successful, is because there is a rationale that there is something different there that is difficult for you to obtain via e-commerce, or it is a differentiated product. And if you think about shoes, they're much easier to obtain. And even for Nike itself, the direct-to-consumer aspect, to be able to go onto an app and get that drop and be able to buy those shoes without ever setting foot in a store. So I think when you're thinking about brick and mortar retail in particular, to be very thoughtful about why consumers are going into that store and if they still need to with an effective e-commerce channel.